Making an offer without a pre-approval letter is like showing up to a job interview without a resume. Sellers will not take you seriously. Here's exactly how to get yours. In fact, buyers who don't get pre-approved often end up losing out on their dream home to the tune of $500,000 or more. If you're a first-time home buyer looking to navigate the complex process of buying your first home, this video is for you. You'll learn what mortgage pre-approval is, how to get pre-approved for a mortgage, and the key differences between pre-approval and pre-qualification. What is mortgage pre-approval? Mortgage pre-approval is the process by which a lender reviews your financial information and provides a written commitment to lend you a specific amount of money to buy a home. This process typically takes 1 to 3 days and requires documents such as pay stubs, bank statements, and tax returns. The lender will also check your credit score, which should be above 650 for the best interest rates. How to get pre-approved for a mortgage? To get pre-approved for a mortgage, you'll need to provide the required documents to your lender, such as identification, proof of income, and proof of assets. The lender will then review your credit report and provide a pre-approval letter stating the approved loan amount and interest rate. For example, if you're buying a $400,000 home with a 20% down payment, you'll need to provide proof of $80,000 in savings. Pre-approval documents needed. The documents needed for pre-approval include pay stubs, bank statements, tax returns, and identification. You'll also need to provide proof of income, such as W-2 forms or 1099s, and proof of assets, such as investment accounts or retirement accounts. The lender may also require additional documents, such as a gift letter if you're using gift funds for your down payment. Pre-approval versus pre-qualification. Pre-qualification is an informal estimate of how much you can borrow, while pre-approval is a formal commitment from the lender to lend you a specific amount of money. Pre-qualification is typically based on a brief review of your credit report and income, while pre-approval requires a more detailed review of your financial information. For example, a pre-qualification letter may state that you can borrow up to $300,000, while a pre-approval letter will state the exact loan amount and interest rate. How long does pre-approval take? The pre-approval process typically takes 1 to 3 days, although it can take longer if the lender requires additional documentation. It's essential to get pre-approved before starting your home search, as it can give you an edge over other buyers and help you negotiate the best price for your home. In fact, sellers are more likely to accept an offer from a pre-approved buyer, as it reduces the risk of the sale falling through due to financing issues. The importance of mortgage pre-approval for first-time home buyers. Mortgage pre-approval is especially important for first-time home buyers, as it helps you understand how much you can afford and what your monthly mortgage payments will be. It also gives you a competitive edge in the market, as sellers prefer to work with buyers who are pre-approved for a mortgage. In 2025, the mortgage pre-approval process is more streamlined than ever, with many lenders offering online applications and quick turnaround times. Don't wait any longer to get pre-approved for a mortgage. Click the link in our description to download our free mortgage pre-approval checklist and start your journey to homeownership today. With mortgage rates at historic lows, now is the perfect time to buy your dream home, and with a pre-approval letter in hand, you'll be one step ahead of the competition.